Disney was actually the first trade I took. I'll show you the trades I took when I first opened up. I always like check the SPY and the Qs, right? Or I always check the SPY and the Qs. So I'm gonna get rid of all these levels. Basically, what I noticed is just going back over the last week, right? All right, today, yesterday, the day before, the day before, the day before, basically the whole week. We have been trading, give or take within a range. I mean, you could say, yeah, 414.50s. Yeah, about 414. I'll say about, yeah, like 414, 414.50s. And then the bottom of the range on the week, like go all the way down here, like 409, 408. But then even coming back even further, like there's obviously some support down here, right? So I'm looking at this. We're trading within the range, at least for the last week, right? We're trading within this range for the last week, 410s to 415s, basically. And then if you go back a little more, like obviously there's support down here at 403. But what I noticed is that, especially going into the open, we were looking bullish and going up towards the top of the range, basically going into the open, correct? Like right around here. Pre-market, we're looking bullish, and we basically stayed up towards the top of the range for the most part. Look, as we're getting closer to open, kind of like trending down. And also, like I just said, because for the most part, like going into the open, we're at the top of the range for the past week or so. We're at the top. It's more likely that we top out and reject. The risk to reward is just better. Like if you're looking back over the week, because we're at the top already. Now, if we're consolidating down here at the bottom, I'd be looking to buy the dip. But since we're at the top, I was looking to fade. So that was one of my first trades. Actually, my first trade was on Disney. I'll show you the reasoning and psychology behind that. So if you look at Disney, going into earnings, we're looking bullish. Going into earnings, right? We're looking bullish, dude. And I made some shorts on it. Remember, I was like, oh, it looks like they're buying the rumor. So right here, this is going into earnings. Look, just putting in higher lows, grinding up for a few days. That's buying the rumor, right? And then when their actual earnings came out, and I haven't even checked their earnings, but I'm assuming that they were bad just by the way we dumped, right? I don't know. I'm assuming it was a miss. I haven't verified that, so don't quote me on that. But just looking at the price action, pretty much tell it was a miss. So on this trade, basically what I noticed was after we dumped basically off the earnings miss, basically dumped twice here and here. But ever since then, we've been consolidating down here for a minute. We're basically refusing to go any lower. Actually, we were consolidating right on previous close. So about 92.30s or so. So I seen that and I was like, all right, I don't believe Disney will dump anymore. It's already dumped a lot. So with the few days of consolidation down here, my belief was that we're going to consolidate and grind up. So I actually went long here, bro. Like off the open on the dump. I seen us break down previous close. I was aware that that is kind of bearish, but I felt like because we were consolidating for a hot little minute that Disney was gonna eventually recover because it's a blue chip company, bro. So once I seen us dump off the open, right here, right, and then push up, dump again, I was like, all right, bro. There's no way Disney's gonna break down like the 90. Like $90 or whatever, considering where it just came from. So I bought the dip. I grabbed calls, and it was a perfect execution as far as I'm concerned. Even with not having the muscle memory, I was able to do it. So I bought the dip down here and freaking got out right up here at high day. That was my first trade. Decent little winner right there. My second trade, traded the SPY. Again, like I was explaining to you, I noticed that we were at the top of the range. Basically, look, for the last few days, it came up here, reject, came up here, reject. So I'm seeing us running pre-market running up. But look, we rejected the last few days. And this 414.50s definitely looks like it's obviously a resistance. You could see it. Look, wick terminating there, was able to break above it, swiftly broke back down. Decent rejection off of that. Came back down here to the bottom. 410s. Grinded back up. Came up here. Rejected again. So my thinking is, obviously, this is the top of the range, and we're going to reject again. And that's what we did. So I faded that thing, bro. Like right here, when I seen this breaking down, actually, nah, because I was watching the 1 minute. Market open here. So when I see us topping out, right here, and then I'm also watching the S&P 500. So we gapped up off the open, but I immediately noticed that we're topping out up here, bro. So you see that, like, topping action at 41.42 and change. I'm watching this as well, all right? And I already know the SPY's at the top of the range, and I was also watching SOX S. Look at what SOX S is looking like. So obviously the S&P 500 gapped up. That equals a gap down on SOX S. But as I was watching it, I noticed it gapped down, but then found support right around here. So the topping out on the S&P 500, support on SOX S, and then I'm also, like I said, watching the SPY and seeing us come up here and reject off 414 2 days in a row, and nasty rejections, bro. Look, reject all the way, going backside, cracking all the way down here. Again, reject, going backside, all the way down here. So, I mean, it's not far-fetched to think the same thing's going to happen today. And that was my thesis. You feel me? I mean, obviously, yeah, it's easy to go back in hindsight, trade in hindsight, but that wasn't hindsight trading. Look, I could show you, I think I could show you some of my executions. I think I had the Disney 92. No, yeah, 93 call. Oh, right here. So you see, you see the triangles? So where I seen this come down here and consolidate. Well, actually, this is the actual contract. But look, off the open, we dump. This is where I see us come down here and, like, kind of refuse to go any lower, basically. And this is just off the open, like the washout and then a quick bounce play. But already knew that the market was bearish, because remember, I'm looking at the SPY come up here and reject off that 414 for 2 days in a row. So this was just a quick play, like the washout and a quick bounce. And I caught that. That was the Disney calls I got. And here's the actual chart of the price action of the contract. I bought down here and sold up here, like right at previous close. I mean, I could have got max on the contracts at 43 cents. I mean, I paid 19 cents for them, but I mean, I doubled my money on those. But once I seen us, like, get weak and start breaking down previous close, I just took the profits off the table. I believe I had the 412 puts. Yeah. So look, here's the actual price action, the chart of the contract. So as you can see, I bought here and sold here. So yellow is a buy, red is a sell. But these are puts. So basically, the higher this goes up, the lower the SPY is fading. And even look, it looks like I could have stayed in there because it's still grinding up. We actually got as high as 135, but again, like, I gave it a chance. We came up here, tested previous close. I seen this wick, and we kind of seen some weakness. So instead of playing around with it, I just took profits off the table. You feel me? Here's what the SPY looks like right now. Off the open, right around here where I see us try to push up, fail, put in a lower low, and then there looks like there's some intraday resistance here, right about there. And I see some violent price action on my peripheral. We're going to check that out in a second. So look, off the open, I see us try to push up and reject. And then I'm looking at this, and then this wick right here, that's what made me grab the puts. I grabbed the 412s all the way up here at 413, faded them all the way down here. They're deep in the money. Like, I bought them up here at like 413. The 412 puts, I sold them like sub 412. So decent little trade there, decent little play there as well. So I mean, honestly, like, on the day, I mean, I'm actually satisfied with that, bro. You know what I mean? A couple $100 in like an hour or two. I mean, I'm satisfied with that, because again, bro, like, I am not trying to hit home runs. I'm only in it for benefits. But let's see what's going on here on the S&P 500.